This is Mike Lingle from Rocket Proforma, and today we're talking about why do we need financial projections. So you may have an answer in your head. That's great. Keep the answer, and we'll see if we cover that by the end of this video. So why do we need financial projections? In my mind, in order to answer this question, we actually have to ask, what is the goal of a startup? So take a minute to think about this. What is the goal of the startup? The answer, of course, is world domination. But seriously, what is the goal of a startup? The goal of a startup is to create a working business model that is repeatable and that you can scale. That's the real goal. And the ingredients that go into a working business model are validation. So you understand something about customers and how they behave. You can get them to behave the way you want, and you can get them to pay you for it, or you can somehow monetize that. Successful marketing, so you not only understand your existing customers, but you can reach new ones, and there are enough new ones that you can grow the business. And then successful management. And successful management is where the financials come in. And in reality, financials are the language of business. That is the foundation of business. So when you're starting a business, you need to understand how to speak that language. You need to learn the basics. You don't have to become fluent, but you definitely need to understand how it works. Otherwise, you may not be starting a business. You may be starting a hobby or a charity. And unfortunately, I see that all the time. But really, if we're going to start a business, we need to understand the finance piece. And so my goal is to make that fun and easy and quick and not complicated. None of us have to become Wall Street whizzes or accountants in order to do this. So just my own story, I had a company called Tonic Studios back in the 1900s. Remember them? And we actually became successful without raising any money. And we had all these big Fortune 500 customers. And then all of a sudden, the dot-com crash hit. And there was a day where my business partner and I started talking and realized we were out of money. And we looked healthy on paper. Our income statement said, hey, all these Fortune 500 companies owe us money. But in our bank account, we didn't have much cash left. And those Fortune 500 companies had stopped paying. So we were healthy on paper. We were unhealthy in our bank account, and we couldn't sign any new deals. So we had been kind of living off of the new deals that gave us enough money to pay the salaries of the people we had hired. But there was a day where we divided up a list of people, and my business partner and I each had to fire half of them. And that was horrible. That was one of the worst days in my career, not just because it was bad for our business, but because we had made a promise to these people that we would manage responsibly. And so that was terrible. As part of that, my business partner left, and I was, I stayed with the company, but I was saddled with debt, right? The company was saddled with debt, and debt hurts growth. And so what happens is the debt payments that you make back are non-productive, right? I'm not putting those towards salaries. I'm not putting those towards customer acquisition. I'm not putting those into the product. They're just going to pay back past growth. And one catch about debt is that it can only be paid back out of profits. If you are paying debt without profits, you're just pushing money around. You're creating other debt. So you have to generate profits in order to pay debt. And if you're generating profits to pay debt, you are paying tax on that money before you can make the debt payment. So not only do you have the debt payments and the interest, but you have a tax bill that you're bringing up every time you're paying back that debt. So the good news is I was able to pay that debt back, but our plan was sort of running real lean and close to disaster, whereas this guy, Bill Gates, I was reading about him around the same time, and when he started Microsoft, he had a rule that they had to keep a year of cash on hand. And what that meant in his mind was if something bad happened, like a global pandemic, they would have a year worth of cash and a ton of smart people that they had hired in order to pivot and figure it out, right? And now he is the richest man in the world and I am not. So clearly his plan had some merit. But that's another approach, is just have a bunch of buffers so that you can react when you need to. And so I stayed with that company. I ended up paying off the debt. We still had a pretty good business. We lost, obviously we fired a bunch of employees and we had debt. But I paid it back. I brought it back from the brink and then started growing again, brought in a new business partner. And for this company, we were moving our business to the cloud, sort of early in the cloud game. And we ended up raising a $2 million Series A. And part of what happened when I was bringing the company back from the brink, the first company, is I started doing my own QuickBooks. Someone suggested that to me. They said, that was one of the best things they had done as a business owner. And I started doing the same thing. I started working in QuickBooks, and that helped me understand how the money moved through the business and how the financial statements interact. I never became an accountant, but I learned, enough that I was able to not only run my business, bring it back from the brink, which took some financial planning, but also help build the financial model that we used to raise the money for the next company. And so we raised $2 million in our Series A. There's nothing quite like having investors put $2 million in your bank account. We raised that money and then used the financial plan that we had built to run the business for the next year. So it wasn't just smoke and mirrors, an imaginary financial plan. It was an actual plan, and it kind of worked. Obviously, we changed some things, it evolved, but it kind of worked. And for me, it all started from learning the stuff that we're doing now. And so then, once we raised that money, things went well. That company ended up getting acquired, and so then I started working with other entrepreneurs, trying to sort of pay it forward. And I started building financial models for other entrepreneurs. And I realized that I was actually doing them a disservice because I would hand them this fancy financial model and they still wouldn't understand how to edit it or how to make changes. And they couldn't talk about it with themselves, their partners, their investors. So that's actually the core of Rocket Proforma, is getting all the power of a spreadsheet, but getting a much simpler interface that anyone can understand. But that brings us back to, what is the goal of a financial model? Why do we need financial models? A lot of people say, to raise money, which is fine, but really it's also to run the business, right? And so the tools that we're going to learn in this class are finance basics, and they're not that complicated. There's not that much to learn, and it's not, the math isn't super complex. We're also going to, and that's going to create a mental framework. And we can use that mental framework in running our own business and starting new businesses and advising people on their businesses. But a lot of it's just understanding the questions to ask. And then we're going to learn how to find answers. So we're going to learn some research techniques and skills. And we're also going to learn how to look into our own business and get some real numbers, because we all have this sense when we're creating financials that we're pulling numbers out of thin air. But we're going to see how to solve that. And we're also going to work off of a great template. You can use whatever template you want. There are lots of financial projections templates out there. I happen to really like the Rocket Proforma template. That's the one I'll be talking about. That's the one I use. And I encourage you to use it too. But you can use whatever template you want. But I do suggest starting with a template, because it's easier, they do the math for you, and it helps you not forget things. And so circling back to why do we need financial projections, I think the thing that's the trigger that I see is people are raising money or trying to get into an accelerator, which is cool. Yes, you need financial projections to do that. But I would also encourage you to think about financial projections as a tool that you can use to run the business. Right? And that's really the piece where you can be proactive and you can plan and hire responsibly. Unlike me, unlike my 25-year-old self, hiring is a big deal. And you can avoid problems. You can avoid being sunk into debt that you can't repay, or not realizing that there's a tax bill that comes along with those debt repayments. So I hope this session has helped. I have a bunch more videos. I look forward to walking you through the basics of startup finance and also, just enough accounting to be dangerous. Thanks so much. This is Mike Lingle from Rocket Proforma.